high-risk investment. Trading on margin carries a high level of risk and may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with trading and seek advice from an independent financial advisor if you have any doubts. Market opinions. Any opinions, news, research, analyses, prices, or other information contained on this video is provided as general market commentary and does not constitute investment advice. Master the Markets will not accept liability for any loss or damage, including without limitation to any loss of profit, which may arise directly or indirectly from use of or reliance on such information.
Hi traders, welcome to our Traders Talk. Today we are reporting in live from sunny hot London. So really sweating over here. It's really quite hot. We got about 32 degrees. Today, just before I introduce our guest for today, I just want to let you know just a little bit of the purpose of Traders Talk. It is mainly to give you the truth of trading by interviewing top traders who trade for real and give you different perspectives to trade the markets on the smart money framework. We also interview partners like brokers, software providers from time to time who give you the necessary support to overcome the obstacles you are having in your trading so as to help you achieve consistent trading performance. Today's guest is Stephen Hoad. He is a professional trader, quantitative analyst, and risk management expert with over 20 years of experience in global financial markets. A former senior derivatives trader at top institutions such as Barclays and Cargill, Stephen brings a powerful blend of deep technical expertise and hands-on trading knowledge. He's the founder of the Stop Hunter, a platform dedicated to trader education, market analysis, and algorithmic strategy development. Stephen is widely respected for making complex market concepts accessible and actionable for traders at all levels. Stephen, welcome to Traders Talk.
Hello, Terry. Thanks for having me.
Yeah, really good to have you here. I know you're as cool as a cucumber while I'm sweating away. I'll look to see on how to improve that as I go along, maybe learn some tips from you on how to keep cool. Just before we go deep dive in, and I'm quite excited about today because of also the new book that you have released as well. So I think a lot of our audience are waiting to listen more about that and this new way that you look at the charts. But before we look at all of that, Stephen, just a little bit on your background. So tell us, how did you get into the world of trading? How old were you when you started? What event triggered your interest? And do you do other things other than trading full time?
Just to correct the introduction there, I didn't work for Barclays or Cargill's.
All right, okay.
I did do. So I actually started in the mid-90s, so it's actually 30 years this year. I started at investment bank Merrill Lynch in fixed income department. I did economics at university, but I was a mad sportsman, wanted to be a professional cricketer. Injuries, and I got to a very high level, but injuries and other things got in the way. So I wanted a career that was as competitive as sports. I can't do, the I don't know, call it the 9 to 5. I needed something that was a bit more lively, a bit of thinking. And I think it was also one of my favorite films, which was Wall Street as well. So I had it in the back of my mind that was the avenue I was going to take. And in those days, you could pick up the Evening Standard on a Monday or Tuesday and flick through the vacant jobs. And I saw one at Merrill Lynch, right at the bottom of the pile, a starter's job. And yeah, that's where it started. And then from that, I went to work for a Japanese bank called Sanwa. And that's where I learned about Renko, which we can talk about more later. Then a German bank called West LB. And then for most of my career, I was at a place called Koch, which is spelled Koch, which is the biggest private company in the world, which is bigger than Cargill's, for the record. And Charles Koch, the owner, is one of the richest men in the world. And they are a commodity trading specialist, oils, metals, they own paper, minerals, the whole lot. They own the whole life cycle, but they have a big trading division where I was an options trader for a while. I helped design the trading strategies, optimize them. I was the senior risk manager there as well, managing all the risk in the front office. What else? Got a master's degree in quantitative finance. The coach job did so well, I actually retired in my mid-30s. And then I was having dreams of just doing a bit of trading from home and playing a lot of golf. But my wife got bored with me and told me I should get out the house and do a bit more. And it was at that time that people were just asking me, they knew I'd retired, had done well, said, can you trade my money for me? I said, no, I'm not going to get into that. I'll just teach you how to, how to do it, how I learned it, professionally. And that sort of spawned into the Stop Hunter. And the Stop Hunter is sort of an education business. We used to run in-person courses, but not any longer due to COVID. A lot of consultancy work. So work with hedge funds, designing their systems and strategies. Other consultancy jobs, tech firms, turning data into strategies. What else do I do? Well, we got the YouTube channel, obviously, at the Stop Hunter. So that came about because one of my daughters said in lockdown, challenged me, saying, "I bet you can't run a YouTube channel." I said, "Yeah, I bet I can, and I bet I can get get paid by Google." And I did, and it's just grown, and there's been a good educational resource platform for my sort of content. And yeah, it's quite a sort of a trade. I'm a trader who gets into everything. So on top of that, I do guest speaking and coaching and mentoring. And as you mentioned earlier, the book has come out in the last few months. Finally, all about Renko chart trading, and it's more than just the charts. It's more of a way of trading than just picking up a chart type and doing it. And it's what made me successful in trading. And I forget to mention, I also run my own fund on the side of all of that lot as well. I'm heavily into the automation and quantitative side. I'd probably call myself maybe more a probabilistic type trader. So game theory and all that type of idea that I overlay on top of technical analysis and other ideas that I have to put into one sort of system. So yeah, it's proven successful over quite a few years. So that's a bit of a background for you, dear, around the houses.
That's amazing. Quite a couple of points I caught from there. So many interesting points happened before you became a trader. That's in anybody's life, isn't it? When you look back, I think Steve Jobs' famous quote, wasn't it? You can't connect the dots looking forward, but you can connect it looking back at your life and see that beautiful orchestration of the invisible hand, how it all puts it all together. So that was nice. That was really, thanks for sharing that. I didn't know that part where you got into Renko from the Japanese bank that you were trading in. So that's actually interesting how it all.
Yeah, I learned it firsthand from the Japanese. So in the mid-90s, it was still quite a distant cultural type setup, the Japanese and everyone else. But I got very friendly with them, and they shared how they use those charts. I'd never seen them before. And I thought they were very peculiar, and the other chart types like Kagi and line break and all that. So that's where I got my first sort of taste of it. And initially, I actually rejected those chart types and just went back to the bog standard candlesticks and bar charts and what I knew sort of worked for me at that time. But then, as I got older and wiser, hopefully, I realised actually they were very powerful, and that's now pretty much all my technical analysis is based around Renko trading, and I've tweaked it, the charts to incorporate time, because people will say, well, Renko charts are just price based. I've added in time as well. So it's almost like a new type of candlestick chart, I like to think of it, which has opened up a huge array of different strategies and edges that I can jump on.
Interesting, isn't it? I think another thing that really caught my attention is how you juggle all of these things. I think I've asked you before. I mean, you got the YouTube channel, you do this education thing, coaching, mentoring, you got a fund.
Yeah.
Incredible.
Yeah, I love being busy. I've never stopped. I get up early, go to bed late. And you were saying, what else do I do on the sidelines? Well, I've done Ironman triathlons, played golf, bit of martial arts, got a family, 4 children. Yeah, I don't stop. That's the thing. I just like finding out things and still learning. There's always learning to be done, and I enjoy it. So yeah,
Amazing. It's really good because I think you just give that perspective that, you just don't need to be stuck on the screens. You can also still have a life, as well,
yes.
work-life balance. So it's really good. Nice to hear that. Now, going in a little bit, just tell us before we dive in a bit deeper into Renko and all the technical analysis. What is your general style of trading from using these Renko charts? Is it mainly like a swing trader, scalp trader, position trader, and mainly do you do intraday trading or longer term
I,
swings? What is it?
I forget all of those terms.
Okay.
I classify myself like that. So I've got strategies that, if you were to bucket them like that, would probably fall into all of them.
Okay.
All I know is that I have a sweet spot in my trading between 0 days and about 9 days. So I design strategies around that period of time. My edge erodes after that. I still have other strategies longer term, but most of it is in that period. So I trade futures, options, stocks mostly. I would say it depends. My day's structured that I'll probably start trading sort of lunchtime UK, finish 6 o'clock, something like that. So it's only really an afternoon. So that's where the US markets and futures and stocks comes in. I have a lot of automated trading that works around the clock in terms of strategies. So covers other markets. Maybe it's European indices or other commodities, whatever. So I've built I call it a portfolio style of trading that I've built up. So it's not reliant on just one type of strategy, but lots of different ones. But like I said, based around Renko is its core. Call that the execution window of my trading. But the ideas might come from fundamental or quantitative or behavioral, but I try and turn it into data and analysis, and then, like I said, to use the charts as the ultimate sort of endpoint for my trading.
Stephen, you did mention that. Would you about automated trading? So is all of your trading automated, or do you do manual as well sometimes?
But I started in the old days, and I still like being, I call it discretionary. I still like the hands-on stuff. So what I've done to speed my time up there is I've automated the background analysis. So it will give me trading signals, buy this at, that, or sell that at that, and put your stop loss here, risk that amount per trade. So it allows me to trade lots of different markets all at the same time. Some of it is completely fully automated, as in all the way through. I never even see the trade, but that window that I mentioned, the US window, midday to 1 o'clock to 6, 7 o'clock. I'm still hands-on trading, but I've built a set of tools that allow me to trade multiple strategies and markets all at the same time.
So finally, when you execute it, it's manual. Is that right?
But like I said, some of it is, some of it isn't. So,
Okay, got you. Okay, yeah. That's good to no, because interesting, because that correlates with actually what Perry Kaufman was sharing in the STA lecture. He's automated all the background stuff, but finally he said that when he executes it, he likes to have that human touch a little.
yeah, exactly that. Yeah, no, I like to still feel it, and sometimes I even outperform my back tests. So it's also a challenge. So sometimes my decision making, can be slightly, but I suppose 30 years of experience can be slightly better than my automated systems. But I still like, call it digging at the pit face of trade.
Nice. There's always something to it that
Yeah.
we really can't explain it fully. But yeah, that's good.
My sports background,
All right.
loving on the competitive side of it, it feels too cold just being a fully automated trader. I've got to feel that I've earned the win.
Nice. So coming into Renko then, Stephen, so before we go deep into what Renko is, but why did you come to this preference of trading Renko than any other charts?
Yeah. Well, literally in all my time, I've seen, I think, just about every chart type possible. I've tried every chart type possible, but this one, it just stuck. I said I initially dismissed it and then went back to it. When I went back to it, actually, and understood, more about trading and how technical analysis worked, I realized for me that it just made everything a lot clearer. It took away a lot of the noise, the trends, the reversals, the patterns, to me were so much clearer, transparent. It just gelled with how I thought about trading, and I found it very easy to build systems and strategies around that chart type, where I struggled maybe more with, I did okay with the others, but I didn't do great with the others. And moving to Renko, I was outperforming massively compared to that. And I think it's just the nature of their style. Once you understand how they work, and like I said, introduce time further down the line into it, I don't really use any other chart type anymore. So I don't think I need to. It's no point. It's not broken. Don't try and fix it, sort of thing. It works.
So mainly you would say that it's because it took a lot of the noise away, and your performance also was much improved when you're using this versus other charts. Is that right to say?
Yeah, pretty
Nice.
much.
And Stephen, so is there like a concept to the trade setups you take? I know that you got a lot of strategies in your portfolio, strategy portfolio.
Yeah.
But if you were to look at maybe even about 2 or 3 of them, what is the kind of concept that you're taking from them? Is it like more like arbitrage, or is it more like bounce off, breakout? How would you say the concept is?
A very good question. I think it goes back to probability. I find something that has an edge. I give that edge a number, and then I, like I say, execute it through the Renko chart. So I do a lot of testing on the data and the Renko charts. And if I know that the odds are in my favor, the probability, I will then execute that strategy. If it tells me, if I'm getting that signal to buy it, I buy it. I don't argue with it because I've tested it thoroughly. So it's more, like I said, it's more than the Renko. The Renko helps me, but I would say I'm very, especially because I was an options trader. When you're an options trader, you think about things in terms of probability and statistics and outcomes. Rather, that was one of the other big turning points in my career. It's like finding Renko and being an options trader. Those two together, like that thinking mindset, the options trader has completely different to a regular trader. And I think incorporating that thought process around probability, odds, that was one of the things that transformed my Renko trading results. So it's putting the two together. So it's not just one setup. Yeah, it's got trends in it, it's got momentum in it, it's got reversals in it, mean reversion in it. There's so many different things. There's stuff based on on sentiment tools, indicators in there as well that complement the charts. But altogether, then what I also learned at Coke when I was there, doing the optimization role, is how to put different strategies together to optimize, to create the correct risk size per trade. So you have strategies that don't work so well, they're smaller size compared to ones that do work well, you go bigger. Then I use stuff like the Kelly criterion, which is about scaling up trade sizing, home run sort of strategies. So it's a whole system rather than just a chart type. So it's very difficult to define, exact things because there are so many different strategies right now. I find an edge, I then work out whether it's sustainable, how, test it. And then, like I said, that final piece is the Renko charts because of its clarity, lack of noise. It's easier to automate and analyze for me. It might not be for others, but for me. And that's the last piece of the jigsaw that makes the whole thing work.
Just a very a short question on this. I know it would be quite wide and diverse to talk on it, but if I were to just ask, and you gave me a brief answer on, you talked about an edge. So you said you will find an edge. I guess the viewers will be interested in knowing how do you find that edge? And then is it like you use data to prove that edge before you carry on further into the strategy construction?
Yeah, two ways. And actually, I'm running a masterclass on this Thursday, actually, on this. And that is one of the questions: how do you find the edge? Now, not everybody is lucky enough to have the resources that I have. So you might have an idea, but how do you test that idea? How do you prove that you've got an edge? So then I will be saying, well, you can go live and trade your idea, but you risk smaller amounts. You record the results. It's all about keeping your statistics. I use Sharp. I'd probably say just 3 statistics you could start with: Sharp ratio, risk return, win rate. Just those 3 would be sufficient enough. Or the flip side is you've got some programming skills or automation skills. Then I find an idea. It looks like it works, so it's like an eyeball test sort of thing. And then I get that data, plug it through my back testing engine, come out with some numbers, say, looks okay, but where can it be made better? Is it through trade management or risk management or scaling or putting it into the portfolio, or is it the actual rules and the indicators you're using on top of the charts? So there's 2 flips to that. You either got the skills and the tools, and then you can automate it. But the testing's easy, well, I think. And then but the flip side, if you haven't, I said you've got an idea, you call it sort of live testing sort of thing. And I've done that before. I've got an idea, I want to get it going really quick. I don't put all my eggs in one basket, risk small amount, and say I'll give myself a 3-month window to test it. And at the end of that 3 months, if it's, performed, it's hitting the right statistics, then you can go live and scale it up. So I hope that's the sort of answer to that.
Nice. Thanks for sharing that. I think that gives a good idea for people as well, like how to really test their edge. I think I really like that part where you said about live testing 3 months if they don't have the capacity to back test it and everything. So that gives a lot of ideas for people.
Yeah.
Now, yeah. And Stephen, if I were to talk about entries, right? So I know you got a lot of strategies, but if you could maybe just go through maybe even one of them. How does an entry look like, or what would trigger an entry? And feel free to share your charts.
It's a really, really simple strategy set up here. Let me just share for you. Can you see a screen?
Yes, I can see that. Actually, I just remembered, just before you talk about the entry, if you can explain to the viewers what a Renko is, I think that'll be really helpful.
Yeah, let me zoom in because then it'll make it. A Renko chart is a block of price action. And you define the size of the block. So if the price moves a certain amount in either direction, you get new blocks, basically. They move at 45 degrees. And as you can see from that, that's crude oil, WTI crude oil. For me, it takes out, like I said, a lot of the noise, and you just get these nice trend patterns. And the way technology's changed over the last 10 years now, retail trading didn't have this opportunity, but a lot of the chart packages, this is TradingView, build in time, you can see around there. And you can now also add on, call it Western indicators, like that's a stochastic indicator and a couple of moving averages. Before you couldn't do that 10 years ago. Now pretty much anyone can. So that's why I think Renko's got some legs, because you can do a whole lot more for it with it than you could. But that's essentially what Renko is. It's just a block of price data. This one here is set to, each one of these blocks is worth 12 cents. of data. So if the price fell down 24 cents, you would get 2 blocks. And it's set to 1 minute. So those blocks close out after 1 minute of price action. So you imagine a 1 minute candlestick chart. You have your candle. At the end of that 1 minute, you've got the open, high, low, close, all printed for you. It's the same with Renko charts with time. Instead, you've just got the defined price action in that window of time. And sometimes around news events, you can have the price jumping all over the place, but it'll only close out those blocks at the end of that 1 minute. So sometimes they disappear and not disappear. That confuses new users a bit. Again, I'm covering that on my Thursday thing. Ways to get around that, or in the book. But essentially, that's what a Renko chart is. And if you go up to the indicators, or the chart types on TradingView, you can just find it down there. It's just one of the many it's actually patched in with those other Japanese chart types, Renko, Kagi, line break, Heikin-Ashi. So yeah, that's it. And do you want me to walk you through this simple strategy here?
Yeah, definitely, Stephen. Just one question I had that popped up, might be popping up in the viewers' heads as well, which is, you mentioned about Renko being block charts, but then I was just thinking in my mind, what's the difference between a Renko and a range chart? Because they're on a similar concept, aren't they?
Don't know is the answer. I don't use range charts, so I guess it's another way of doing it. Again, they're available on there, aren't they? So they're down the bottom.
Yeah, that's what I was.
This is a Japanese way of doing it. Maybe it's similar. So it's almost similar a bit to point and figure charts. The concept of defining the box size on a point and figure chart. Range charts I've never really got into or explored. So
no problems. Yeah, go for it. Go for the entry. Yeah.
Yeah. So like I say, crude oil 12 cents, and this one would simply be, now why I know this works. Let me actually see if I can bring up another page for you. Now tell me if I bring, can you see that thing I'm dragging onto the screen?
Yes, now I can see it. Yeah, nice.
Right. So let me just blow that. So this is we'll talk about automated trading. So I've actually back test that exact setup through here, and you can see the signals that I get. And this tells me I'll win 83% of the trades, maximum number of losses in a row 4. It'll tell me the percentage that I've made over the strategy. So you can see the test area, different block sizes, different inputs, different results per year. If I click back on that like that, and I can go back test, the black line is the back test. Oh, disappeared. There it is. That's the equity curve, which is very nice, and the red is the drawdown, which is basically the blocks you're giving back to get out of the trade according to the rules. Now that is exactly this in TradingView. So all you would literally do is it's so simple. This one is, you've got a let me click on the variable so viewers can see. You've got a 200 moving average, 7 moving average, and the stochastic set to 1253. And the other beauty of Renko is that it makes indicators like stochastic work a lot better than what they do on a candlestick chart.
Right.
You can see these clear trends working, and they stay longer in the trends on the stochastic. So what you would do is you would look for, you can see oil's been a bit choppy really at that block size. But if, let's take it here for an example, once it crosses the stochastic, you would be looking to sell, but you would also need confirmation from above. So the price would have to be below the 200 and below the 7, which, as you can see, if I highlight, can I highlight that?
Yeah.
That is not happening. So you would ignore that trade. That wouldn't be a trade. So here, for example, you can see more precisely, it's below the longer term moving average, below the shorter, and we've got cross here. You're in that trade straight away.
Right.
and you get out when it crosses back. So you'd get out somewhere here. And it is a case, it's not about risk return. I've never seen any strategy in my world that's you say, oh, I'm going to sit there and wait for a 3-to-1 risk return. You can dream of sitting there, you get to 9-to-1 out your 3, and then it comes back to flat or you lose on it. So
Exactly.
this is a indicator-based strategy. So I get out when indicators tell me. Obviously, there's rules about setting initial stop losses and that, but essentially, the backtest tells me to take all these trades if that criteria match up, and that's at a really basic level. But key to Renko is the block size. Now, if I changed, let me just remove the diamond join and go to the block size. If I make it a bigger block size, you can see what happens to the data. So if you were a really long-term trader or longer term, same thing. You see this nice little, it's now gone up to a 30-cent block size. You've got this patch here where the price breaks down through the long-term moving average and the short. You've got the sell there, and this will be a lovely, massive winning trade. You stay in until it comes back through there. You'd have probably put your stop loss somewhere around there. So I don't know, 5-6-to-1 on that one. But over time, if you run this over 2, 3, 4 years, because you might start your trading, in one of these shorter trades, where it's in and out. But the secret to this is executing consistently. So you'll pick this one up, this lovely big one, and these ones might be flat for a while, maybe a small loss, but overall over a year, you've generated, a monster return, and that's what the back test helps me. Talking about that edge and knowing, the psychology of taking the trade, and that's what that allows me to do. So that's a really basic one for you.
Well, it's really good.
You can get more advanced. You can add other stuff in there. If people want to join me on my masterclass on Thursday, go for a whole host of strategies and ideas. So that's really basic setup.
Thanks for sharing that, because I think what people also got to take away is, you don't need a really very complicated strategy, because sometimes some people get into that kind of thinking, isn't it, Stephen? Where
Yes.
They need a lot of rules, get the entry precise. I like this because, I always feel simple always works, because, and also it builds on the robustness of the system, if I'm not wrong. Right?
It's correct. Yeah, I always start from, I say it's the KISS thing. It's keep it simple, stupid. It works. You don't have to add hundreds of indicators and all the rubbish on top of it. I've just taken a stochastic and 2 moving averages, a bit of knowledge about Renko, back tested it to know that I've got my edge, and you let it run. Simple. Well, it sounds simple, but I suppose it's come from a lot of years of experience. But essentially, it's not that difficult for anyone else to learn or pick up, is what I'm trying to say. You don't have to be a NASA rocket scientist to come up with this. And there's so many indicators and tools now you can mix and match with Renko. And what I do, one of your viewers could easily come up with something new and better than what I've done. But it just, it works for me.
Amazing. Thanks for sharing that. And of course, anything looks simple after years of experience, like you said. And I think for people to get the shortcut is to hang around professionals. That's what I always tell all our clients as well. The fastest way to learn something is get a mentor who's already been there, and then they can get you there in the fastest place.
Yes, definitely. Yeah, it helps learning from someone who's been at the front line and taken the knocks and the blows to smooth it out to come out with some decent results, because it hasn't always been smooth sailing for me. It's been ups and downs and stresses and strains, but hopefully I've got there in the end. So
that's the journey of any trader, Stephen. You're not alone.
No, exactly. Yeah, if it was that easy, everyone would be doing it. So
exactly, just like in anything, isn't it? In any profession to get to the top.
Yeah.
A quick question on entries. Do you scale into your trades?
Not really, no. I've fixed. Because I was telling you earlier about optimization of risk sizing due to their performance in the back test. that sort of thing. I have different size of trades when I come in. So that strategy we just looked at, if that was one that was a top performer, that would warrant a bigger risk to start with than one that had a lesser back test. So that's how I have different trade sizes according to performance. It's actually called preference function in econometrics. So that's where my sizing comes from. I do add to trades because sometimes you can be in a trade like that and you get sub signals that allow you to add. You know, that really long trend we just saw on WTI oil. If there were sub signals around it that are telling me to add to it, I will add to it. But if they're all telling me to get out at the same time, I get out, you know, and exit as well. So I have a fixed size before I go in. I don't use the 1% or 2% risk. I use Kelly's criterion and the Sharpe ratio, a whole host of other statistics to come up with the trade sizing. But then when I have, that's what I use.
Interesting. You mentioned about the position sizing differently for different trades. That reminded me of what Ed Top in one of his interviews said, based on probability of the trade setup, he position sizes accordingly. And also it comes back to the blackjack days when some of these traders that were interviewed in the new market business, they were all blackjack traders and card dealers, and they used to, when they see a good card flush and probability, they would put a bit more higher bet on it, and that's where the principle comes from. It's interesting you mentioned that, because
well, funny you should mention it, but he is one of the people that I've sort of used as a guide to my trading.
interesting.
I can look up to my right hand side and I've got his book, A Man for All Markets, just up there, and he's one of the people, Kelly, Jim Simmons, that type of trading person. It's always what I like.
Amazing minds, brilliant minds.
Yeah, but Ed Thorpe is, like you say, he was very good at blackjack as well, wasn't he? So
yeah, exactly.
I can't do card counting, I'm afraid, but I'm useless. I stick to trading.
That's good. Any best trade to date so far that you want to share with us on the entries that comes from your memory, or whatever that you classify as a best trade?
Now, I've had, I don't know, I can trade a couple of thousand trades per month at maximum output. Nothing really. It's all because it's just because it comes in the expected results that I don't have anything. I go, wow, that was a amazing trade. Sometimes you get extra lucky because it's tied into a news event or Donald Trump saying something that you weren't expecting or something like that. I've had very good professional sized trades that, you know, far bigger, you know, when you're working for investment banks and trading companies than you'd ever would as a retail trader. Like I said, I used to work, you know, trade gold and copper and oil and those sort of things. So had some good trades there, but none in particular. There's ideas that I like that I've enjoyed. So, for example, coffee going up, or you know, air or cocoa going up. I like it when I've, you know, realised that there's something happening. I plug that into my system, and I've taken advantage of that situation. I like that, you know, and I've made money out of it. But you know, as in, you know, I don't worry about whether I've made $1 million on one trade or 100,000, because it's all to me about, am I still hitting my statistics? I know all my statistics, how many wins, you know, my win rate, my risk return rate, my Sharpe ratio, all off the top of my head. So that's what I'm always trying to maintain. So, you know, a nice big win, you know, changes the stats a bit sometimes, but that's more important to me, is the consistency of trading rather than big wins and big losses. Obviously, I deal with them when they happen, especially the losses. You've got to watch out for the losses, but yeah, nothing. I can tell 1,000 trades and nothing really stands out. It's just part of the job.
Amazing. Thanks for sharing that. I know you did mention the word consistency quite a lot. I would say that if there's any holy grail in trading, I think it's the consistency part.
Yep.
Yeah, we'll come to that a bit later. Moving on to stop losses. I mean, do you use stops, or do you just mainly get out using the stochastic?
So no, so I have I call it a safety stop,
Okay.
and that stop allows me to trade size. So if I know, I don't know, trading futures, you've got, depending also on the length of the strategy, I know the holding period as well. So something that I think is going to last 8 days or more is going to have a bigger stop loss than a scalping strategy that might, I need a really tight stop too. So I have different stop loss methodologies there, but they're really there as like a safety net and to help me then determine how many futures lots of something I should put on. All my exits are done by indicator signals. Doesn't have to necessarily be the stochastic, it can be other indicators I'm using, but it's a rule-based approach. So if the rules tell you to get out, they're like your stop loss anyway. So you're always you're running that process. If something untoward, like I said, a news event, Donald Trump comes out and you are scalping and you've got a tight stop, there's the safety net. But you're basically running, again, going back to the statistics and knowing your performance, that's what you're there. So you expect maybe one big loser every now and again. And then that comes down to the win rate and risk return and all those sort of things. So,
Well, I guess the key thing is knowing your stats right from the beginning and knowing what your average loss eventually will look like, isn't it?
yeah, it's all about the average over the longer term. And most traders new traders get excited about, the first week or month, or where it's a long-term game. If you want to be successful at trading, you can get lucky for a few months, you can get lucky for a year, but to get lucky for 10 years, 20 years, it's extremely difficult. And that's what if you want to be successful at trading, that's what it's about. It's a long-term game, and you've got to think long-term rather than, the day-to-day. And that's what I try and do through using statistics and that sort of thinking.
Nice. And do you trade your stops, Stephen, or no, not at all? Do you use time stop, money stop, technical stop, anything like that, or?
Sometimes I trail stops. If I know that, say, in that trading window I'm trading manually and I know that it's coming towards the end of the day, and I will be very rigorous on that time period. I won't sit there for another 2 hours waiting for the trade. I will then bring that stop, trail it behind a certain indicator or Fibonacci line, or so I like your super trend indicator on Renko works very well. So I do. It's not in the main rule set, other than more a trade management sort of risk management tidy up rather trading, because again it just works on the signals. I let it do its stuff. I've back tested it. I should have confidence in it, and I let it run.
Nice. And I know you mentioned about the risk management. You use Kelly criterion and not the general equity percentage risk management, isn't it? So you use the Kelly and the Sharpe ratio and all of that to position size. Is that right?
Yeah, totally right. So I don't go, I'm going to start with 1% risk or 0.5% risk per trade. I learned that again in Coke. If you've got a great strategy, why do you want to limit yourself to 0.5% risk per trade? Obviously, that comes through experience, so I wouldn't recommend it to everyone. But there's also, you can take your Kelly criterion, because essentially it is just the inputs of the win-loss ratio and the risk-return ratio. And that can tell you how good your strategy is. And then if the oil trade example I showed you, I know that I can lose 4 or 5 trades in a row at any one time, which is the back testing confidence it gives you. So then you can take the Kelly criterion, divide it by a number of trade losses, so 5, but if you want to be more risk averse, you could say 10, and then you come up with a trade size that might actually still be only 1 or 2% of your actual risk size, but it's all about the confidence in your strategy. And then what I will do also on top of that, I compound the returns as well.
Okay.
So that allows for that growth naturally. But I don't go to just the standard 0.5%, 1% risk. It makes sense, but I try to better it.
Nice. And last question on this stop loss and all that. Is there any trade that comes to your mind that taught you the biggest lesson?
I can do it if I'm allowed to say it on air. When I was professionally trading gold, I was sitting there and I was screen watching, and I didn't have a proper stop loss in there, and I needed to go to the toilet, and I went running up to the toilet, and it was not doing too much. But when I came back, I'd forgotten that there was a news event scheduled, and I was sitting on a nice big loss. And if I'd have done some tidier, stop loss management, maybe I wouldn't have taken such a loss. But that one always sticks in the brain, that one. So that, I suppose, that always said, right. Well, and actually I was always taught, even on the professional trade, I always think about using stop losses in a certain way. And when you're option trading, it's a bit different. But yeah, you always have that thought in your mind to build it in some sort of mechanism.
Interesting. Yeah. Thanks for sharing that. Yeah, it's always those traits that stick in your mind. But you know what? Yeah, I guess as we all know, the biggest losses are our biggest lessons, right? To come more stronger and more refined. So
I always say to people, you can learn more by losing in trading than you can by winning.
so true.
You pay more attention to why you lost than why you won. So that's what I'm also saying about going live, taking that, what we talked about earlier about, back testing, going live. You'll learn far more how your strategy works by trading small risk and putting those trades on, even if you're losing, than you would for a random simulator. Or you've got to get your hands dirty and feel it, and you'll learn far quicker.
So true. Well said, I think. I think learning from losses more than winning. I think that's in any endeavor, isn't it? I think from failures you learn much more. You go more stronger.
Whether it's sports or a job or anything. So the key secret there is, as long as you learn from your mistakes. If you keep repeating your mistakes, then heaven help you, sort of thing. You shouldn't be doing trading, but it's very costly.
So Stephen, moving on to target, right? So I guess you kind of answered it, but maybe I'll just ask it just to get some clarity. So do you have a predefined target on any of your strategies, or is it exiting usually live when the indicator signals you or any other parameter signals you?
I have no targets. Okay. The target comes from the back test and that average. The average risk return, I know I need to know I have to be hitting that or better. So that helps you also in the psychology of the trading, because you've got that data, that statistic there. Because if the trade does suddenly perform better, you can close out because you're above your average, sort of thing. But I never sit there with, I'm going to do a 2-to-1 strategy or a 3-to-1. I've never seen it work, so I can't be that precise. I'm not that good. So I'd probably run, which will surprise maybe many of your viewers, I'm probably at about 0.5 or 0.4, 0.5 to 1 risk return. So for every $100 risked, I'm looking to make 40 or 50, rather than what you'll see in a lot of videos about people looking to risk 100 to make 200 or 300. It's because I also know that I have a very high win rate, which is around 70 to 80%, that I can run a lower risk return. And that's how my trading works. So I don't fixate on 2-to-1s or 3-to-1s or that. I fixate on that, the statistics, the longer term.
I guess some of your strategies will have a higher risk return, or generally they're all about 0.5 to 1 with a high win rate.
No, you're right. So say scalping one's probably got a higher risk return because it's got a tighter stop, but it's got a lower win rate. Whereas the longer term ones, lower risk, lower return, but high. Sorry, the other way around. The scalping muddle up now. Yeah.
Yeah, so the scalping will be a lower risk ratio, but a high win turn rate, and then the longer term strategies will be low win rate, but then a higher reward to risk ratio.
So you manage it that way, and again, as long as you know what they are before you start off, then like I say, you don't have to worry about the the 3-to-1s and 2-to-1s, that sort of thing, 1-to-1s.
Nice. And do you scale out of
No.
your trades?
No, if sales get out, get out. I've never really built in scaling out to, like I said, I'll scale in if there's other signals, but not scaling out. Is normally what happens is that it's time to get out for everything that you're in the strategies, rather than take a bit out, you've made a bit, or keep the trade going. No, I'll just get out.
This final question on target, I actually got this from one of the questions that Jack Schwager actually asks the trader in the Market Visits book, where he asks him, when do you stop optimizing, and when do you stop tweaking your strategy? And the guy replies saying that after a while, when you're at peace with most of your trades upon exit, when you don't come out of it feeling regretful or thinking that I should have stayed in a bit longer, or I should have, cut out the loss a bit faster. But when you know that you've done it fully according to your plan, would you say that you are probably there as well, that all your trades, when you come out, you're totally at peace, and as long as it all fits with your stats and everything?
Yeah, I don't care whether I won or lost. I try not to get angry. Well, there's no point getting angry about it for a start, but yeah, it's like a business sort of mindset. That's how I process it. As long as I'm not doing anything stupid and those losers aren't, outliers, then you continue. I'm not tweaking all the time. I'm always monitoring, but I'm not changing. I only change if it needs to happen. So I'll give a strategy as much chance to win as possible. But if it requires a tweak for some reason, then I'm not adverse to changing it. But I never get too emotional about trading. I'm a bit like a robot sort of in itself of, that's what it says to do, so do it. So, and if it's difficult at times, especially if you're discretionary trading, but I think that's a mindset that's been learned over many years, and adopting all these things that have got me to that point. Because I'm sure when I first started, I was very frustrated at the results I was getting, wondering why, you've taken that loss and why did that happen and that. But if you know your strategy and your trading, then no, I don't get too emotional about it.
Interesting. Now, talking about mindset and not being emotional and all that, on the topic on psychology, I know it's a big topic altogether. Do you have like any pre-trading routines or something like that to get you in the zone before you trade?
Now, I'll let you into a secret that my wife is actually a trained psychologist. I'm constantly being evaluated.
Oh, wow. Okay.
Actually, no. My routine is born from my professional trading days. It's you get in, you do your pre-analysis or setup, you get yourself set up, and off you go. And then at the end of the day, I don't do any breathing exercises or anything like that. At the end of the day, I always analyze what's gone on. I never let a day go by. I'll always know how my performance has been on that day, what worked well, what didn't, how it fits in with the statistics, and then it's lodged in my brain for the start of the next day. And when I leave the office, I try and forget all about it. And that's when you move on to other stuff like family or hobbies or whatever. I try not to take anything home with me in the world of trading.
Did you have this mindset naturally, right from the beginning days when you were in the professional environment working for those banks, or was it something that you did that finally got you to that kind of mindset?
I think it actually came from my sporting type background. That way of training hard, turning up, performing. Being a cricketer, I was always knowing what my batting average was or my bowling average, or all those sort of things. And when the game's finished, it's done, sort of thing. Go and enjoy yourself with your team and that sort of thing. So I think there was a little bit already in there, but you are conditioned over time. you work around a lot of different personalities. Some very emotional, some very cold, all different backgrounds, brain sets, so many different things. So I think it probably the conditioning there rubbed off, and it is quite routine mindset. But I think my own personality, I've probably had a lot of it already in there. I haven't done any coaching or training around mindset, or I've read books on it, and like I said, my wife knows a lot about it, but I think it's just inbuilt in my personality.
Nice, very, 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 very nice to hear that. It's interesting, right? How our earlier days of practices actually shapes up to who we are today, isn't it?
Definitely.
It's a great
Don't
foundation.
realise how those skills may be becoming useful when you're in another field when you're older.
So true, yeah. How it all comes together, amazing. Stephen, we're coming into the last part of the show. Just for the audience, if they want to put any questions in for Stephen, now is the best time. And I just got the final things, basically. If there's anything you want to show on your screens, feel free to do so on anything that you want to add or whatsoever. Other than that, as you're thinking about that, also, what's the best place that people can find out more about you, Stephen?
Okay. Start with my website, www.thetophunter.co.uk.
Let me just share my screen on that one. That's the one, isn't it?
Yeah, that's the guy. Yeah, that's the one. So that'll link into my YouTube channel on there. It'll talk about my new book. You can find that in the bookstore part there, and that's
Learn more. No, here, this one, isn't it? Learn more, right?
Yeah. Well, if you go to the bookstore page,
So when you click on that, you'll go to the bookstore, I guess.
Yeah. And then it's in different formats, but essentially that's what we talked about today. But that the combination of the whole lifestyle of trading, it's the theory of Renko plus, how do you test a system? How do you automate it? The mindset, I call it the samurai trading mindset, because I think a samurai is quite, hence him on the front cover, quite disciplined, methodical, ruthless when they need to be. And I thought it was a good way of tying in the Japanese Renko charts, a sort of a mindset type thing. So there's a bit on that in there. But I hope there's sort of a full trading system. If you want to get into Renko, there's not much out there on it, and hopefully that's the book to get your hands on. And the rest the YouTube channel, there's links to that. A lot of content I give away on there, and not just Renko, other the concepts that we talked about, other chart types, bit of analysis. There's lots of different playlists people can work their way through and have a play around. And like I said, we've got the masterclass coming up on Thursday. If anyone's interested in that, it's a more of a practical, hands-on. There's still tickets available. You can click through there. It's like sort of what we've done today, but in a lot more detail. 3 hours of Renko trading and how you build your system and strategy. So a lot more of the detail. So the website's the best place to start with me.
Yeah, so much of content is amazing that people can take advantage of. So thestophunter.co.uk, traders for you all to look at. I was about to ask you why the samurai, but I think you already
you also notice I actually designed the cover myself. The path is actually bricks, and Renko in Japanese mean brick or block. So put him on a sort of a bricky blocky path to signify the Renko, and like I said, introducing the samurai trading mindset and the Japanese chart type there. I thought it all tied in.
Interesting, yeah. A man of many talents, Stephen. You designed the book cover as well. Amazing. I should ask you, what is it that you cannot do? I don't think there's anything.
No, there's plenty I can't do. There is plenty. I just found the things that I enjoy and like doing, and I just focus on them. I can definitely guarantee I am rubbish at a lot of stuff as well.
Okay. Yes, there's just a question come in. I know we've gone past a little bit past time, but it's
Yeah.
fine. I think the traders doesn't mind. What platform do you use for testing? I think that's the question that's coming in from Stuart from US.
A very good question from Stuart. I've built my own. As you saw that screen share, that we saw the signals initially before the trading view chart. I built that, coded it up because there's not a lot of software out there. You can do it in Excel if you're really patient and you're good with Excel. Sort of, you could do it in MT5, MT4, but it's not very good, Renko, in that chart. It's because Renko's sort of just coming to, popularity, say. So there's not a lot of background stuff. So I had to actually build my own stuff. So that's how I test it. Python's quite easy to use for it. Yeah, so that answers Stuart's question. Probably doesn't give him the right answer because he probably wants to know where he can do it himself, but it's very, very limited.
Those that don't have their own platform, what would you then suggest them to test Renko on, or any other strategy?
I would do it that way that I suggested. You pick up a Renko chart, give it the eyeball test, find the right block size, make it look like it works, and then you could manually go through the chart back a period of time and see whether it works over a longer period, and then do some live testing. Go onto my YouTube channel, find some strategy ideas, and I give back tests data in there. So it'll give you a clue to see whether it's roughly right or wrong. And just do the live testing. Give yourself 3 months, small trade size, log the results. If you haven't got the skills or the resources to back test it like I can, then I would suggest that type of approach. I think that would work.
Nice. The last part of the section is speed run. So I'll just give you one word, one word at a time. I'll give you 3 words in total. But when I say the word, what's the first thing that comes to your mind? So I'll start with the word strategy.
Edge.
Okay, great.
I don't know if it's going to be the right words. Now it's going to be the first thing that comes in my head.
Okay, strategy, edge. Interesting enough, I have another one which is just on that. So if I say edge, what would come to your mind?
Probability. Another word.
Nice, I like it. And perfection.
Hard work. Is that 2 words? 1 word.
That's fine. I mean, 2, 3 words, even a line is fine. And the last one is success.
The first word, well, again, that consistency.
Consistency. I love it. Very nice. Stephen, thank you so much for your time today. We've come to the end of the show. It was really very insightful, very different, and also very nice to talk about your new book as well. I'm sure the audience will get their hands on it. Any final words that you want to add or anything like that?
Well, I could say if you're interested in the ebook version, it's actually on sale until the end of the week. The other versions, the hardback and paperback, aren't, but the ebook is about 40% off at the moment till the end of the week. But other than that, no, thank you for having me on. I don't often get out and talk on these sort of podcasts, so I hope the viewers have found it interesting. And if they want to learn more, please drop by via the YouTube channel, the email address, or the website. You can happy to field comments and share my knowledge. And I've been lucky and successful over my time, and quite happy to share what I've learned. So thank you for having me on.
Thank you so much for sharing, traders. We believe that you found that very useful and insightful. And if you want to find out more, the stophunter.co.uk is the website to go to. Other than that, as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.